Now we'll cover some of the historical anecdotes about foreign currencies. In the last 30 years, many monumental things have occurred. We've actually seen huge amounts of money be made in foreign currencies. Jack D. Schwager in the book Market Wizards 1 and Market Wizards 2, the new Market Wizards, details those people who have done phenomenally well with foreign exchange. A lot of exciting things have happened, as well as countries having been involved in wild fluctuations in price. We've seen the collapse of Asia, the Asian economy. We've seen the collapse of the Russian economy. We've seen the increase of Eastern European countries being brought into the EU. So a lot of things have happened in the last 30 years with currency trading, and we're going to highlight some of those to give you maybe some ideas on how you too can trade the foreign currency market. We'll begin with one of the most famous names in currency trading today, and that is George Soros. Some would say he's a famous man, some would say he's an infamous man, but whatever the case, he's done phenomenally well with currency trading. He started one of the world's first hedge funds, the Quantum Fund, and he's always had a macroeconomic view, a top-down approach basically, in which he has tried to determine what the economies were like of entire countries and bet for or against those countries. It's a very interesting way to trade, especially for many who have a micro view, who trade stocks or those who trade one particular commodity at a time. It's interesting to look at an entire country and dissect it up and decide where's it going and then be able to profit from it. And George Soros has definitely been capable of doing that. One of his most famous adventures was his ability to break the Bank of England. Many people in England still dislike George Soros, especially the central bankers, for what occurred in 1992. At the time, George Soros and his Quantum Fund had decided that the British pound was overvalued, and there was no two ways about it. The British pound was due for a huge correction. The economy of Britain had stopped growing, while many countries had still had a lot of faith in Britain and had driven the value of the British pound, or also known as the sterling, through the roof. And he used a pretty sophisticated strategy, which involved borrowing against British bonds to buy foreign currencies, and then converting those currencies back to British bonds when he decided he was successful. But the core of it is that in foreign currency trading, more so than any other investment, there's a huge amount of leverage, oftentimes 100 to 1, if not 1,000 to 1. And we'll see another case later on in which the leverage becomes absolutely excessive. So George Soros used basic leveraging techniques to break the Bank of England. He shorted the pound, and when it was done, in spite of all of the attempts of the Central Bank of England going out buying British pounds to shore up the British pound, in spite of all of their attempts and efforts, people had more faith in George Soros's determination that the bond was weak than in the Bank of England, and began to sell into the bond. By the time the bond, the British pound, began to sell into the British pound, by the time the British pound was done, George Soros had made over $1 billion off of one particular trade. And it was a matter of approximately 6 months. It wasn't a very long time. But from that point forward, many people felt that he had it out from day one against the British pound. And the Bank of England definitely still doesn't have good words for him. It was an aggressive move, and it paid off. You know, if you can say that in a 6-month period, they successfully made $1 billion. And that, fortunately for George Soros, wasn't the only successful coup. He had a lot of active involvement in the collapse of the Russian ruble. He made profits during the Asian collapse, the Southeast Asia and South Pacific currency collapses. And so even in a few of the stories I'll tell you, George Soros has definitely had a heavy hand. So he's been involved with this industry for 30 years, and I suggest anything you can find out or read about him would definitely add to your level of knowledge about how currencies are traded. Many of you may remember back in late 1990s, at the same time as the dot-com bubble was beginning to heat up, many of the Asian countries, Thailand, Indonesia, Malaysia, Singapore, even Australia, which is affected by that economy, were all finding new renaissances during that period. Their currencies were up, their exports were up, and they began to become a lot stronger than they had been in the last 20 years. And this created what was known as the Asian tiger phenomenon. People thought that this economy was going to go on forever. They saw that Thailand's currency was moving up. They saw Malaysia's currency moving up. And at the time, many people felt that it was overheated. They just didn't know when to get in. They realized that as the currencies of these small countries became stronger, the amount of exports they could put out was more and more difficult for them. And eventually, they would hit a critical point, and their currency would be too strong, where their exports were too expensive and no one would want to buy them, and eventually the currencies would come tumbling down. Well, George Soros and his quantum fund group seized the opportunity to take advantage of this overheated scenario and began shorting Thailand's baht and Malaysia's currency, the ringgit. And they began to aggressively short these currencies, setting the tone worldwide that if George Soros was against these currencies, maybe there was something going on. And when July of 1997 rolled around, about 2 to 3 months later, after George Soros and his group began shorting the currency, the Thai officials decided to devalue the baht so that they could release some of the pressure off of the currency casually. They thought that if they devalued it themselves before the speculators got a hold of it, they would diffuse some of the aggressive tendencies of the speculators. Unfortunately, this backfired. It set off a wave of devaluations throughout Asia that, frankly, just hasn't been stopped even till today. It drove the value of the Malaysian ringgit completely down, actually destroying the economy there. The Thai baht is yet to recover. In fact, some believe that it set the country back at least another 25 years in development. And it was, when you see it, you're not sure whether or not it's something they deserved due to their aggressive stance and allowing it to get out of hand, or whether or not this was something that speculators just simply took advantage of and were able to succeed in profiting. There are a lot of views. But regardless, Malaysia's prime minister definitely had a lot of strong words to say against George Soros at the time. And in spite of what George Soros said, one of the things he said was that him and his group had gotten out before the complete crash of these particular currencies, and he had lost money because he had actually bought in when he thought that the price of the Malaysia ringgit and the Thai baht had reached their absolute lows, and when it continued further, he'd lost money. But many believe that George Soros and large speculators like George Soros are predatory. They take advantage of currencies in countries that really can't afford such aggressive moves against them, and that these speculators hurt their bond markets and they hurt their interest rate markets and do a number on the central banks. I leave it up to you to decide. I believe, just as we talked before, that by watching large companies like the Quantum Fund, George Soros' group, another popular trader, Victor Niederhofer, and R.G. Niederhofer, his brother, their funds, you get a clear picture of what's going on in these countries and potential opportunities to profit from them. Now we'll look at an example of a company that didn't succeed at doing a successful move against currencies. As we said before, George Soros has tended to have a lot of good luck in trading, and many other companies have felt that they could mimic the efforts of George Soros and other major hedge funds that operated on such a macroeconomic level.